Sometimes you ask the question, when you go through a losing streak, should you do the opposite? Here is Tick Pulse taking the opposite trades, long only. So whenever there's a sell program that comes into the market with this low volatility, a buy signal has worked instead of a sell signal. This is the original Tick Pulse. So if you're trading, if you're using the filter so that you don't trade low VIX, then you're not taking these trades anyways. But if you're looking at the original Tick Pulse that trades all the time, sell signals just don't work in this low VIX market, and they oftentimes become a better buy signal. But if you take a look at this over the past month, long only, you turn the shorts to long, this is what you get. So should you trade this instead now? Should you just do the opposite? Let's take a look at the longer term picture so we can see how much of a 1 month deviation this really is. I'm going to change this, change the history on this as far back as I can, and you'll see the result. So here is the history of what would happen if you did this. I have history going back to 10/16, 2017. So if you did the opposite, you see it does work sometimes, but in general the trend is down the equity curve, and you can almost see how when it does work for a short period of time, such as this time period here, and then then it will revert. Anything is possible. The opposite could start working, but in the past it's done this before where the exact opposite looks great and then it resumes. And so I'm using the original version because it's the most raw and it trades a lot, and so you can take a look at that. So let's look at the original version and I'll show you the results. So this is the original version that trades aggressively even during low VIX, and you see similar spike downs. This is when the opposite worked in these time periods, and so you would expect an opposite equity curve. It's not completely opposite because of slippage and commission is taken out on both sides, and we didn't reverse the profit target and stop loss values. So here are the results. This is with slippage and commission, so it's about $51 average trade profit. And you know that getting in during a drawdown is one of the best times. And so if you're looking at trading Tick Pulse, now is the time. If you time your drawdowns accurately and they resume the uptrend, your average trade profit will be higher. It's right now the average trade profit since this time, from this point to this point, is negative. And so if it resumes its uptrend and it reverts to the mean, then your average trade profit will be higher when it goes through a winning streak. And so that's one of the reasons why it can be a nice way to time these strategies and getting in on the drawdowns, is because you can overcome lower average trade profits for systems that trade frequently. This is still, if you take out, we've taken out $25 round turn slippage and commission, so the total average trade profit is 51. That's still good for a system that trades this frequently, and so you still have an advantage in the market, and you have a particular advantage getting in on drawdowns if the strategy continues, and so that is the risk in trading it forward. And this is the original version that trades aggressively. We're going to take a look at the other versions of this, and so you'll have the latest results and you'll know the latest on how to trade Tick Pulse. So here's the Tick Pulse page, and you can scroll down and see what the latest results were through the, August the 27th, and the hypothetical performance results this is without slippage and commission, and you see the inputs. And so we've looked at the original version, and we're going to go through stage 1 through stage 5 now and look at the latest results, so you can see the opportunity, where the opportunity is in getting in on the drawdown. And so stage 1 uses the VIX filter for longs and shorts, and so that is the only difference, and so we're going to take a look at that. And so here is stage 1 upgrade, and we're going to take a look at the results. This is the original version we just looked at. Here is stage 1. I'm going to set the time frame, go back to 10/16, and then we'll look at the results. So here is stage 1. You see this equity curve is in a trend line. It's pulled back before, it's pulled back before, pulled back before, and so it could be a good entry point. It's been choppier in the past, and so it could pull back and then move higher, or it could go sideways for a while, but this is the opportunity to get in on a drawdown on this strategy. And so that's stage 1 for Tick Pulse. We're going to look at stage 2 next. Here are the results actually before we do that. 69.48 average trade profit, And then here is the drawdown, 44.75, based on an open trade basis, on a closed trade basis, 3,900. And so let's take a look at stage 2 next. Here are the stage 2 results. And so it's 212.16 average trade profit, nice boost when we have that VIX filter on and we have the bigger stop losses. 41.75 drawdown, 32.12.50 drawdown on a closed trade basis, and the equity curve looks nice. Just a small little drawdown right here, and so this is the more selective way to trade. You don't trade as much, but it's a better approach as far as risk management. So look at the monthly results here, and so it is down, and so one of the things you can do is to look for one of those down months to get in and look for the cycle of volatility. Will the end of 2018 be like the end of 2017? And if so, these VIX filters will continue to prevent you from trading as much, and and if it does pick up, then you have opportunities related to higher VIX markets. And so next, we're going to look at stage 3 just as a review. These are the stages on the Tick Pulse page. If you go to Tick Pulse, you can see the results. We've looked at original stage 1 and stage 2. Now we're looking at stage 3. The only change here is we're changing we're a little bit more aggressive because we wanted to see, okay, now we're more selective. What happens if we tweak it to be a little bit more aggressive again and take these trades on lower tick thresholds? And so I'm going to update the dates, and so we'll then take a look at stage 3 in the next section. So if you're trading stage 3, these are the results. 214 average trade profit. We finally have a 2.0 profit factor. 32.75 closed trade drawdown. Here's the equity curve. Very nice. Just a little bit of a drawdown here. And so let's look at the periodical returns on a monthly basis. Minus 1,100 on 3 trades. Not bad. And so these are the results. You're just patiently waiting here for VIX to pick up or not trading. And so it's good to have many different strategies. If you like to trade frequently, it can be frustrating if you just trade one strategy and you're waiting for it to trade and you have a VIX filter. And so you can trade multiple strategies as well. In general, the markets have been very narrow, not a lot of trends, accumulation, distribution. SR counter trend strategies have very, very few signals lately, and so there has not been a lot going on, and we're approaching a more active time of year potentially. We'll see, but that's stage 3 for Tick Pulse, and we're going to look at stage 4 next. I'm going to set that. So here is stage 4. The results for stage 4. It increases its aggressiveness a little bit more. We lower the VIX thresholds to 10 and 12 instead of 15, and so you're taking long trades as long as VIX is above 10, and short trades if VIX is below 12. And so it's pretty aggressive, and it's incurred more of a drawdown like the original strategy to do that this month. And so you see on a monthly basis down 21.8750 this month if you're trading it like that. And so we'll look for a rebound since it's lower than all of the previous months. But I anticipate a little bit more trend in this market at some point. But this is a more aggressive approach to try to take shorts. You have the approach where you don't want to miss a trade, so you take shorts when it's above 12. But sometimes it's best to wait when it's above 15. So you could trade different variations of this. You could trade stage 4 along with stage 2 and 3, which have higher VIXs. And so if you're a multi-contract trader, you could trade multiple contracts on each one of these allocations to diversify. And so these are the results. You see, again, it's in a trend line of a drawdown. And so those are the results for stage 4. Stage 5 is aggressive as well, and we're going to take a look at that one next. So here are the results for stage 5. It is a more aggressive version as well, and you see that it has taken its drawdown because of it. The trend has not been there, and we're looking to aggressively trade the trend when you're aggressive, and if the trend doesn't happen, you go through a drawdown. But it's, again, in the trend line of the equity curve, and it's not at a worst case drawdown. The worst case drawdown was in March 22nd, 2018. In this time period, there have been worse drawdowns in the original version in the past, based on the original version. I have data for the original version. And so, yeah, here's the equity curve, and here are the results. So the point of all this, the point of this video is to show you the latest results of tick pulse, what to expect. Should you do the opposite? And it's done this before, and so the opposite has looked great for short periods of time in the past. If you want to call a turning point and say the market's going to be like this forever, you can and do the opposite. But my theory is that if you want to trade a strategy and you want to buy a dip in the strategy's equity curve, now is a good opportunity. It can be a good opportunity to trade this now and to start your allocation on trading tick pulse if you want to buy the dip and improve your opportunity for average trade profit if it resumes the uptrend in the equity curve. And so that's the update for tick pulse.